Who can you buy life insurance on? Buying a life insurance policy on someone besides yourself might sound kind of strange, but in some situations it may make a lot of sense. In order to buy a policy on someone else, you must have insurable interest and their consent. Insurable interest means there needs to be a real relationship in which there would be a financial loss when the person dies. So you can't just go out and buy a life insurance policy on Tiger Woods or an acquaintance or a stranger, but you can on a family member, a business partner, or key employees. And creditors can even get a policy on their borrowers. You also can't secretly buy a policy on someone else. The insured must sign the application, and they often have to have a medical exam. So why would you want to buy a life insurance policy instead of having the other person buy it and name you the beneficiary? It comes down to control. The buyer is the policy owner, which means you have the control. You can ensure premiums are paid on time, you have the authority to change the beneficiary, and you can take out policy loans or surrender it for cash value if it's a permanent life insurance policy with cash value. If you're just the beneficiary or insured and not the owner, you don't have that control. What types of situations might you want to take a life insurance policy out on someone else? Let's talk about 5 scenarios. 1. In order to fund a buy-sell agreement. Business partners often buy life insurance on each other called key person life insurance. They would name themselves as the beneficiary so the surviving partner can keep the business running and, if applicable, buy out the deceased partner's spouse's share of the business. 2. If your sibling is taking care of your elderly parents and he or she died, your parents would be at risk of losing their care and you want to be able to help fund their caregiving costs. Although hopefully they have a long-term care insurance policy in place. 3. To fund your parents' funeral expenses when they die. 4. If you co-signed on a loan, the lender will come after you to pay off the loan if the borrower dies. 5. If your ex-spouse owes you alimony or child support. Courts will often order exes who owe child support to buy life insurance and name their exes or a trust to benefit the kids as beneficiaries. In order for a policy to be in effect, premiums must be paid, and the insured must sign the policy and verify their medical information. Buying a policy without this info is insurance fraud, and the consequences are pretty steep, like the policy would be canceled, the claim would be denied, or even prosecution. So just be sure to be honest on the application and have the insured's consent. I'm Kelly Augsburger with Steadfast Insurance, and if you have any questions, connect with me online or give me a call and I'm happy to help.